you look at the charts, you look at the emails, the phone calls I'm getting, everyone is piling into the commodity space. And this touches on everything, including crude oil. Everyone seemed to just run to the commodity space, and it drove all those markets up really big, which you and I'll touch on these charts. But when you get that surge, it's usually very short-lived, and we see a very sharp pullback from those levels, and that's what we're seeing now. But overall, I think we're going to continue to see quarter after quarter gold continue to pick up speed. And based on the quarterly chart, the next upside target is about $2,600, $2,700.
Here at Liberty in Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty in Finance, and with us today is our good friend Chris Vermeulen from thetechnicaltraders.com. Chris, thank you so much for joining us today.
Hey, thanks for having me, Elijah.
All right, well, we needed to have you on this week. Probably one of the most crazy weeks we've seen in a while for all markets, especially the gold and silver markets, and also oil. We're seeing the price of gas just skyrocket. Trying to get gas here and there, and then you're seeing the prices just rise as you're riding on the road. So your perspective on this crazy week, let's start with gold. We've seen it go up, down, crazy volatility.
Sure. All right. Well, let's just jump to my charts real quick, and I'll kind of give you the visual walkthrough of what I'm seeing. I think one of the best ways to look at more so gold is the quarterly chart. It gives you a big picture view of the major trends, the bull market phases for gold. And you can see we have these bull markets, and then commodities go out of favor for a long time. Another bull market into the 2011 top. We've been out of favor. Now in 2019, gold started a new bull market, and here we are threatening and starting to break out on the quarterly chart. So this is pretty exciting. I mean, this is new territory. This is a breakout for investors, for precious metals, or for gold at least here. And it's pointing to a lot higher prices. And that is a good sign. Now, if we were to look at the daily chart, as you mentioned, it has been all over the place. It has been a wild week. And if we were to just kind of look at the recent price action, we did start to see gold rally. And then once the war kind of took hold, we saw a big spike, a huge wick. And then really we've seen it take off since then. So there's definitely, about 100. There was at one point about $140, $150 premium put into gold because of the war. And it's really created a stampede of everyone moving to gold as a defensive war type of play. So we've had huge volatility. It actually became very kind of overbought on the short-term basis a couple of days ago. I could just sense it. You look at the charts, you look at the emails, the phone calls I'm getting. Everyone is piling into the commodity space, and this touches on everything, including crude oil. Everyone seemed to just run to the commodity space, and it drove all those markets up really big, which you and I'll touch on these charts. But when you get that surge, it's usually very short-lived, and we see a very sharp pullback from those levels, and that's what we're seeing now. The last 3 trading sessions, gold has pulled back quite a bit, along with other commodities, and that to me is just because it was a crowded play. It was news-based. It went parabolic, and pretty much most commodities, if they are testing resistance levels, and so they're selling up at those levels. And so the market's just trying to work off that kind of, sentiment shift of everyone running in the same direction. It's got to shake them out, I think, before these markets go much higher. We haven't quite hit all-time highs just yet based on this chart, but you can see we're getting up close. You could argue this might be a double top for a little while. I do think based on the quarterly chart, the momentum is clearly to the upside for gold. I think we could see this potentially trade sideways or lower for a couple of weeks, maybe a few months. But overall, I think we're going to continue to see quarter after quarter gold continue to pick up speed. And based on the quarterly chart, the next upside target is about $2,600, $2,700 an ounce. So, I mean, remember, a quarterly bar is 3 months. So we're looking forward potentially 6, 9, 12 months, but I think we could hit that target pretty easily in that time frame.
So definitely a trend shift for gold. Are there any price points that silver has hit that shows that silver is on an upward trend as well?
Sure. Well, take a look at the quarterly chart real quick, and you can see silver is quite the beast. It typically kind of lags a little bit, and then suddenly it pops and takes off. And we've seen that in the past. Right now, it has got a very similar pattern to gold in that it's had a very strong rally. It's been consolidating for the last several quarters, building what is a bull flag. And a break to the upside is going to point to dramatically higher pricing. And just based on this recent quarterly pattern here, we're looking at silver running up to roughly the $40 mark, which is also where we had a couple big wicks back in 2011, also back here in 1980. So this is definitely going to be an area where there's going to be a lot of overhead resistance. The momentum behind this move will be running out of steam at that level as well. And there's going to be overhead supply sellers. So that's kind of the next major move where silver could pop and really surge into there. And the question will be, what does it do? I mean, a lot of people are talking about $70, $80, $120 ounce silver. You never know what's going to happen. I mean, we've seen other commodities jump like 50 or 100% in a day or two recently. So anything is possible. But based on conservative chart analysis, this investing time frame, we're looking at $40 silver potentially in the next 6, 9, 12 months.
So that's definitely a larger move for silver than probably gold would make in that time frame.
Yeah, so for sure. Yeah, gold, trading at 2,000, going to 2,600, much smaller, half the move, so a big difference there. And silver's always like that. It's much more volatile, but gold is more stable. It's seen as a global safe haven. Silver is kind of like, sometimes I call it kind of like the late bloomer. Everyone wants to pile into precious metals, into gold and gold miners. They're more stable. And then when everybody finally believes in the precious metals move, a lot of people will jump into silver because they want to use that explosive power and they can drive the silver market very quickly to the upside. So it's kind of a late bloomer. It'll pop and take off. But gold is kind of like the steady Eddie. It'll just be more consistent because globally, people, when they get nervous, they start to accumulate gold, and that makes gold lower volatility, less potential, but more stable. There's always a trade-off, risk reward, right?
We've also seen a rise in platinum. It doesn't necessarily seem as dramatic, but where do you see that standing right now?
So here's a platinum ETF. It's not the prices of platinum, but this is a quarterly chart. Based on this ETF doesn't go back too far, but it's got a similar pattern. It's had a very strong rally to the upside. It has broken two previous standout highs, one here and one over here. So this strong momentum move is a very good sign. And now it's settling back down, just starting to run up. And I think we could see more or less platinum continue to move higher. We can get a gauge of the momentum for this commodity. Looks like there's about upside potential for platinum of roughly 50% to the upside based on this pattern. So, I mean, precious metals, I think, are about to do very, very well. They've formed, a year-long bull flag, and that means we're probably going to see like a year of positive price going forward.
One of the other commodities that has made a huge move right now is oil, and people are feeling that obviously at the pump. So your perspective on that recent move and what has been driving it and where we should look for, where we should see it heading in the near future.
Sure. Well, I've been following oil pretty closely. We've been watching it through these cycles. It's been very controlled. It hit all of our measured moves on the way up, and we are looking for it to top out somewhere potentially around the $100 mark. And if war was going to hit, we were expecting it to pop potentially the 110 or go higher. And of course, that's what's happened. It started to get right up to this 100 mark, and then we had war hit, and we've seen this huge premium get added into crude oil. And it's really created that feeding frenzy. Look at the volume. We've seen huge volume. And this is how it is for most commodities right now. We're seeing massive volume, very explosive moves. And that means it is a kind of a market-driven move. Everyone's piling in, doing the same thing at the same time, and that's why we're getting these huge moves. So definitely high volatility, high risk in this scenario for commodities across the board. I do think we're going to see oil and commodities hold up overall for quite a while, potentially a year or so. We already had the COVID backlog of people trying to keep up with production for commodities and products. And now we've got kind of this war scenario, which adds a premium and people are driving money into these commodities, driving the price up. But now we've got Ukraine, which is, the fourth largest resource country, coming to a grinding halt, getting bombarded. So there's going to be a lot of different problems there about commodities not being produced for other countries. And now everyone's boycotting Russia for all their resources and things like that. That is also going to create another headwind, or more or less fuel to drive commodity prices higher. So we're not just in a bubble phase here. I think we're in high commodity prices. Inflation is going to go way beyond what I think most people are thinking. And it's here to stay for probably a year or two. And hopefully it doesn't get too out of hand, but things could get pretty ugly in terms of pricing for fuel and food and all those things that, we need every day. And it's going to really cut in the bottom line for the end individual user cost-wise.
That is so key, because the price of gas then impacts pretty much everything else. Because right now, we're seeing gas at the pump around $4, if not higher right now. So yeah, as you're saying, it seems like this will impact inflation for possibly years to come.
Mm-hmm. Yeah, it's going to be a major problem. I think this is all going to kickstart a recession. Oil, gas has only been up for a few weeks at these crazy prices, and everyone's already complaining. It's already cutting into the bottom line of their profits every week. So many people commute. Having to commute really burns one day of earnings just to pay for your fuel. So it's pretty bad. And people are going to start tightening up on what they're buying. We're going to see discretionary products. They're not going to be bought as much. So, it's a big cycle. It's a slow moving cycle, but I think darker times are coming ahead, and you got to really start saving now before it's too late.
Now, are there any other commodities that really have been on that you've been looking at right now? I know nickel made a huge move, and the LME actually shut down trading for a little bit. Any other particular commodities that you have had your eye on right now?
Well, here's the nickel ETF. You can see how much it's just exploded in value. Really, just in the last week or half, it's popped 130% to the upside. I think Russia is adding a whole new layer that really is people are starting to realize. I think Rio Tinto is a Russian company. I think they're talking about potentially closing that down, or there's all kinds of stuff going. So many companies are actually run in Russia or owned by Russians. And so there's adding this whole new layer of what companies are allowed to still produce and be used. And it's really, we're just walking through a minefield right now. I think the key here is to be very cautious trading these commodities. As much as I'm bullish on commodities, and we are in a super cycle for commodities to the upside, they are going to be super volatile. If something can move 130% in a couple of days or 50% a day, crude oil is moving 10% a day, Bitcoin, a lot of other commodities are having huge swings. You got to be very protective of your money. You don't need to put as much money to work when it's this volatile, because there's no way you want to wake up one morning to, you seeing your portfolio down 10 or 15% in a day. That makes for a bad year. So to do it in a day is pretty dramatic. And this could happen day after day. So people just need to be aware. High volatility means smaller positions. Cash is kind of king at a point like this. We're very close to a bear market, I think, in equities. We're not there yet, but we're very, very close. So we got to be aware that when that tide turns and we go from this major bull market we've been in for the last decade, when it turns down, commodities will get pulled down with it. But commodities are one of the strongest assets. They'll hold up the longest. Even when we enter a bear market with stocks, commodities continue to move higher for several months before the panic of a bear market actually sinks in and people start liquidating commodities. People start tightening up on their spending, and we don't need as much commodities. We go into a recession. And so I would just say be very cautious and start, so many people are spending on discretionary stuff. It's insane. I think people need to start, pocketing and stay saving just to be cautious here.
You mentioned how we're very close to a bear market. What kind of price points or signals are you looking for to confirm that? Because if I look at like a chart of the Dow, it seems like very clear we're making lower highs and lower lows. And often when we see a crash, it doesn't happen all at once. So you see kind of a rolling over, and then, it takes a little bit of time to really get to that bottom. So what kind of signals are you looking for in the general stock market to confirm that, yeah, we are in a bear market?
Yeah. So bear markets take a long time to unfold. And we've been going on since, depending on the type of stocks you're looking at, small caps rolled over, kind of November, December. The large caps rolled over January. We are making a series of lower highs and lower lows, which is the definition of a downtrend, but we're still within the kind of allowance of a stock market to fluctuate. Right now, we're still in just a correction. It's a deep correction, but it's not a reversal. So the stock market could very easily recover from here. And that's why I've been talking with subscribers. I'm like, listen, we're at a really major tipping point where the stock market could actually rally and have one last huge push, a euphoric stage. And we could see about a 20 to 30% rally in the SP 500. Or it could break down here and we could see, a 15 or 20% drop even further or more from where we are. And that's what we've got to see. We're at a tipping point where I like to look at a lot of different technicals. The weekly chart I find is very powerful for identifying trends. I like to also compare what the stock market is doing to other asset classes, gold and utilities, bonds, all kinds of different things like that. And when more or less the stock market is underperforming everything else and we have a breakdown on the charts, that's when we click into a bear market. And when we click into a bear market, it doesn't mean we're going to just sell off right away. Believe it or not, we'll actually see the market go into a bear market, and then it could actually trade sideways or slightly higher for 3-6 months or so. And that's kind of like it's kind of like the pause before the storm, like a calm before the storm. Everyone's kind of buying this, thinking this is a buy the dip. They don't realize it's actually a distribution phase, and eventually it's going to roll to the downside. And then that's when the real downside to the bear market starts. And bear markets can last, potentially a year or 2 years going forward. And they take a long time to unfold. And it's a painful process for those who watch their assets go down. And there's a lot of way to make money when the market goes sideways or lower. So this is a huge opportunity for those who understand how to trade ETFs that can rise in value when the stock market falls, take advantage of commodities. I think there will be specific commodities that can still do well, precious metals probably being one of them. So yeah, it's a process turning into a bear market, and it'll take time.
What I wanted to turn to before we let you go is the US dollar. How is the whole war situation in Russia and Ukraine impacting that? Are people flying to safety in the US dollar as well?
We have been seeing the dollar move up. I mean, it's been going up for the last year. I still think the dollar is going to do well. I think when there's fear, we tend to see the US dollar do well. And I think the dollar is going to hold up very well going forward. So I'm not concerned about the dollar. I mean, there's a lot of people out there talking about the dollar collapsing and breaking down and being worthless. I'm not in that camp. I think it's still overall a solid currency. And if the Fed raises the rates, maybe that even helps the US dollar currency. Typically, higher rates means a stronger currency. So I think we're going to see it as a safe haven play. A lot of people are going to want to move to cash eventually. And they're more comfortable moving into the dollar than they are a lot of other currencies. So I think it'll be very supported going forward. And I think it's going to hold its value, if not become a really strong leading currency still.
All right. Well, Chris Vermeulen, before we let you go, any last thoughts you had, and where can our viewers find you online?
Sure. Yeah. Again, I think everybody should just be cautious here. And with the stock market, I wouldn't be getting too aggressive in buying any of these dips here until we get confirmation if there's a new rally or if there's a breakdown. Overall, if they want to follow my analysis, I do a blog post usually every other day or so at thetechnicaltraders.com. And subscribers get a morning video where I walk through the charts. We look at the pre-market data, and we swing trade ETFs with stocks, sectors, commodities, currencies, bonds, and whatever I trade, I share with members, and we all kind of trade the same thing together. So that's how they can follow me.
All right. Well, we'll have to continue to track this with you, Chris. Once again, thank you so much for your time, and God bless.
Yes. Thanks, Elijah. Take care.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded. and has 0 complaints ever registered. Here at Liberty in Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.